Well, folks, you got to be flipping my flapjacks. The stock market today just changed everything forever. Now, before we get into what's going on today, I take you through a lot of things going on in the market and how this market has just changed forever. I want to take you back in time for a moment, okay? We're going to go back to when I was born, the 1980s. So let's come on back with me because I need to put something in perspective here, okay? By the way, I hope you guys enjoy this video as always. Thanks for being subscribed. Thanks for being here, okay? So back in the 80s, we had an era that started around personal computers, right? PC revolution. And at first you had these 8-bit computers that started to take off in quite a substantial way in the early 80s. And this is even from the front page of Time magazine in January 1983, right? The computer moves in. And this was a time period when a lot of people didn't really understand the impact of computers, how big this was going to be. And computers took off like crazy. We went from less than 1 million units a year sold to next thing you know, there was many, many millions of units being sold each and every year, right? And a lot of people looked at that time period as like, this is a bubble. Like, who really needs these machines, right? These computers, like, I don't know about this. There was a lot of skepticism around the PC revolution and what was really happening there. And then you go into the 16-bit era, which was in kind of like the mid 80s and even enter in a bit of the late 80s there. And what happened was PC sales just continued to skyrocket and skyrocket. Next thing you know, 9 million units a year, right? And people are like, oh my gosh, this bubble's getting bigger. Who needs all these computers? Well, meanwhile, lots of large companies were starting to buy these computers in mass. They were making almost their entire employee force, everybody, have a computer at the office. And this was something that was going on, and either companies were adapting this new technology or they were becoming less relevant by the day, right? Then finally, at the end of the 80s, guess what? PC sales actually started to go down. And some people were like, oh, the bubble, it's finally ended. It's finally ended after a decade of this thing going from 1 million, less than 1 million units a year to by the end of the decade, over 20 million units a year were being sold, right? Absolutely incredible. But then something fascinating happened. Well, PCs ultimately just got more popular over time. And nowadays, around 300 million PCs are shipped worldwide in a given year, roughly, right? And let's also not forget that every single person has a PC in your pocket, right? That smartphone you have is at the end of the day, it's just a glorified version of a PC, right? It's actually much more powerful than any old school PCs, even 10 years ago or something like that, right? And so what an incredible time period. And it wasn't just a bubble. And what that leads us to is what's going on today and how everything just got fundamentally changed for the stock market forever. Because what just transpired was NVIDIA blowing the doors off and saying, a lot of people are looking at this whole AI movement and they're like, been trying to figure out, wait, is this just some hype thing? Is this just some bubble? Like, is there anything of substance here? And we heard a lot of executives recently talk about how their demand for the next several quarters is going to be insane because there's so much interest in AI-related technologies from large companies. But we hadn't seen it in terms of concrete numbers. And NVIDIA just guided to $11 billion next quarter. Analysts were expecting $7 billion and blew the doors completely off and just changed everything forever. And it is clear that companies are now going to have to adapt an AI strategy or they will be left behind in this game, as companies had to adapt PCs for their workforces or they were left behind in the 1980s, right? The same exact thing's happening now, and this is not just some 1 quarter game or 1 year thing. This is going to be a multi-year, if not multi-decade game when it comes to AI. And obviously, you see stocks prospering that are playing in this space, right? NVIDIA obviously was the biggest beneficiary, as they should be, given the guidance they just gave, right? AMD had a huge move up. Adobe is seen as having a good AI strategy moving forward. Palantir was obviously up almost 5% here today, which is still being disrespected in terms of the AI movement. I watched Fast Money today, right at the beginning of Fast Money. It frustrated me so bad. You know what they say? They say, oh, look at all these AI stocks. They show all these different AI stocks. Even in C3 AI, they even show, which some people debate is that actually an AI company, okay? Did they mention Palantir? Absolutely not. And it's like, this is one of the most obvious AI plays out there. But at the same time, the longer the Wall Streeters try to ignore it, the more it's, we got time on our hands to potentially add a lot more shares here, right? Microsoft made a big move up, and it's become apparent that this AI technology is not just some talked about hype thing. It's here. It's now. And it's about to take off like a rocket ship. Now, what's getting really interesting in regards to the market is how much things are diverging in the market. This is something we really noticed in a major way actually in 2022. But this divergence is not over, and it's actually getting more stretched in terms of the divergence in the market. This is the Dow Jones Industrial Average for the past 6 months, right? And look at the Dow Jones Industrial Average. This is no bull market. This is no, things are great actually out there, right? For a lot of us, it feels like it's a bull market because our accounts have been going up, some cases tens of thousands, hundreds of thousands, or even millions of dollars, right? And so for us, it's been tremendous. We've been loving this market. But the fact is, the Dow Jones, factually, over the past 6 months, is down 4.6%. Now, usually in a normalized market, you would expect the Dow to be up 4% on a 6-month period, right? And in a really good bull market, you would expect the Dow to be up 10% in a 6-month period in a really good bull market, right? But the Dow's having a lot of trouble. Now, imagine, you got to remember also in the Dow, there's a lot of stocks that are weighted in there that are also these tech stocks, these AI-related stocks. What if you took those out? The Dow performance might be down 7%, 8%, 9%, 10% this year if you take out a lot of those big dog Dow stocks that are tech related, right? Microsoft, Apple, and a lot of those guys that are in there. You take us a step further. Look at the Russell 2000. Russell 2000 hasn't done anything for years, okay? It's been in a bad place since Rona. And you look at the Russell, down 6% plus in the past 6 months. This doesn't scream massive bull market. And you could look at this glass half empty or glass half full, right? One way to look at this is, what this means? This means that the market's bad and it's going to continue to be bad, right? That's glass half empty. You could look at this glass half full and you could say, man, imagine when all these indexes start rolling again, whenever that is. The Russell, the Dow, plus the NASDAQ and S&P 500. Imagine what stock prices are going to be looking like then. Imagine what our accounts are going to be looking at like that, right? That's looking at half full. So you can look at it either way. You can look at it from a bearish standpoint. You can look at it from a bullish standpoint, right? It's all about in the eyes of the beholder. You even look at the commodity index. The commodity index says bear market all over it still, right? This is a GSG, right? This is a commodity index. If you don't want to track individual commodities like oil, natural gas, oats and lumber and everything else, right? Just track this, okay? You can add this to your watch list, and let's let you know how commodities are doing over time, and it's also going to let you know likely how forward-looking inflation is doing. Because at the end of the day, when this commodity index is going up like insane, likely within the next 3 to 6 months, you're going to start seeing inflation spike in a major way. When you see it continuously going down and down and down, likely you're going to see inflation numbers continue to go down over many, many months to go in the future. And the GSG is down double-digit percentage in the past 6 months, over 10%, right? What a crazy divergence we have going on in the market. You pull up the VIX, right? The VIX, this is interesting because the VIX, while the Russell's down 6+% in the past 6 months, the Dow's down 4 or 5% in the past 6 months. Commodity index is down 10% plus in the past 6 months. Meanwhile, the VIX is down as well. The VIX is down 7.5% in the past 6 months. This market is death by 1,000 cuts for certain stocks, for certain industries, for certain sectors. It is death by 1,000 cuts. And then you go over here and look at the QQQ. It is booming. This is the past 6 months of the Qs, up over 18%. That is insane to see the Qs up this much and the Dow doing as bad as it's doing, the Russell doing as bad as it's doing. But guess what? If we went back to last year, the NASDAQ got absolutely wrecked, while the Dow was holding up just fine. And a lot of the Dow stocks, it's like if you held the Dow stocks, you were looking good. Meanwhile, if you held Meta, Tesla, Amazon, Apple, a ton of the other tech stocks, Shopify, Netflix, you were getting wrecked throughout 2022 up until the very end of the year, right? What an insane divergence. Now, look at this, right? Look at the weighting of the QQQ. 13% plus of the weight's in Microsoft. Microsoft's been doing tremendous the past 6 months. Apple, 12.5% of the weight, right? Amazon makes up a significant amount of weight. Look at NVIDIA's weighting, okay? Yeah, Google, McDougal, Meta, Tesla, these are all the stocks that have been beasting the past 6 months. So it's very natural that you see the Qs up 18+% in the past 6 months. Because guess what? You pull up a 6-month chart of almost every single one of these stocks, all the biggest weightings in the QQQs, and my gosh, they're all doing amazing, right? What an interesting time. Now, for me personally, I've been experiencing this divergence market. I've been experiencing it with stocks I'm long, right? On the positive side and the negative side. I got some examples to show you. Elf hit a new all-time high here today. Beautiful. I mean, the stock's done as well as you could possibly imagine. The performance of the company, the performance of the stock price, I could not have asked for more. The gain is now 1,300 plus percent, and I wouldn't be surprised if it's on its way to 2,000 plus percent. You know, somebody in the private stock group said, you know, you thought Honest was your next Elf. It could be Elf is your next Elf. And I was like, damn it, you might honestly be right. You might honestly be right. The company's numbers are hard to even fathom. They just reported 78% revenue growth. How do you even do that? How do you even report 78% in this market, in this economy? How are you coming in with 78%? Like, that's just insane. But that's just how great this company's executing. They're the most well-executed company probably in the world. Maybe even above NVIDIA. It's incredible. And it's a flipping flapjack and cosmetics company. I mean, it's just out of this world. So meanwhile, that stock hits an all-time high. Meanwhile, I got a stock like Revolve that's doing absolutely horrible for me right now, right? It's awful. Sure, we're still up on the stock, right? Up about $9,000. Okay, cool. But that stock's down 37% in the past 6 months. So I've lost tens of thousands of dollars of gains in Revolve stock the past 6 months, right? That stock can't do anything right now. It's like almost every day it seems like that stock goes down, right? People don't want any piece of, you know, a great e-commerce company in the clothing space. They want no part of that. Doesn't matter. They don't want it right now. And it seems like every damn day that stock's down another 4%. There's no news, no big news. Oh, Revolve came out with earnings or something today. No, they already did earnings a while back here. Then just down another 4% for no reason. That stock can't do anything right now. Look at a stock like Palantir, right? The momentum just continues day after day after day after day. It's like every day I pretty much wake up and I'm up $2,000 or $4,000 on Palantir stock. It seems like every day that's the situation, right? And this is a stock we are red on, I mean, not even that long ago. And now we're $24,000 in the plus on the stock, right? Meanwhile, I have another stock like Foot Locker that can't get out of its own way. I mean, you know, I was up 30% plus on Foot Locker stock, right? And of course, this doesn't account for any dividends received in the stock over time, right? But I was up 30% plus on Foot Locker 6 months ago. And now I'm in the red on Foot Locker. They can't do anything right now, okay? And the stock price just seems like it bleeds and bleeds and bleeds. Even after their massive move down after earnings, it seems like it's not enough. And here the stock is today sitting at $25 or so. And it's just nothing, right? Then I got a stock like Meta, doing me tremendous, you know, up $236,000 on Meta. It's doing great, right? It seems like every day I wake up and I'm up like $5,000, $10,000 on Meta. It's just a question of, is it 5,000 or is it 10,000? And then I got another stock like Nordstrom. Nordstrom stock is down 29% in the past 6 months. I mean, can the stock ever go up? I mean, it's absolutely incredible, right? This is the sort of market we're in right now, where just certain stocks are doing absolutely tremendous. They can't be beat. And other stocks just are in the worst bear market. I mean, you look at stocks like Revolve, Foot Locker, Nordstrom. I mean, we're talking about 30% type moves in 6 months. That's like the type of performance you would expect in a crashing market. A crashing market, folks. Okay? And then you look at stocks like Meta and Palantir and Elf. And those stocks make it look like we're in the most gigantic bull market we have ever seen in history. This is where you really have a stock picker's market. And this is where diversity really comes in a portfolio. Imagine if I just had a portfolio of all clothing companies. Nordstrom, Foot Locker, Revolve, and that was all I owned, you know, those sorts of companies. They're all doing awful. And meanwhile, you know, look at the Metas, look at the Elfs, look at the Palantirs and stocks like that, right? Obviously, Tesla's had a great year this year. Year to date's tremendous for Tesla. So this is a divergence market we have going on. I could take this one step further. And to give you a real illustration of this is the total amount I have in the public account right now. Okay? A little less than $1.5 million, right? Where did that account start this year? That account started this year at about $1 million, roughly. Okay? Maybe just slightly over $1 million entering this year. That's insane to think. And I haven't even done any massive deposits in this account this year. Like, I do my $250 buys every Friday in here, and the public, you know, everybody in the private group gets to see those moves. But it's not like I've been funneling in, you know, oh, here's $20,000 and $30,000. I haven't done any of that this year. And so, but yet this account just moves up and moves up. Why is it moving up so much? Well, look what Tesla stock's done this year. Look what Meta stock's done this year. Those are the two biggest positions in that portfolio. So no wonder the account's at almost 1.5 mil now, right? Meanwhile, look at the dividend account. This account was way outperforming the public account last year. The dividend account, $154,000 in there, right? I do my $250 buys each week in there, right? By the way, down another 2,600. Did you see the performance today in the public account? The public account was up, what, 20-something thousand dollars? And look at this, down $2,000 plus in the dividend portfolio, right? Look at the dividend portfolio. Hasn't done a dang thing the entire flipping flapjacking year. At the beginning of the year, it was hot. It was up to almost $200,000, right? Hasn't done anything the entire year. That goes to show you how much of a diverging market we have at this point in time, where these Dow-related stocks, these dividend stocks, the safety plays, right? They can't do anything right. It's almost like they're in the biggest bear market ever. And then you got these other stocks that are just, it's off to the races with them. And they're showing no signs of slowing down. Like Palantir, Meta, these sorts of companies, I don't think they're going to slow down anytime soon. Even NVIDIA, it's like, you're going to really sell out of NVIDIA right now? You're going to really sell out of NVIDIA right now if you hold NVIDIA? When they just said they're going to do $11 billion next quarter, that means that's basically in the bag. But what if they do 11.5? What if they do 12? What's the guidance for next quarter going to be for NVIDIA? What are we talking about? Another 11 billion? Or are we talking about 12? Are we talking about 13? Like, what type of number are we talking about for next quarter for NVIDIA? Because we know this AI movement is just not just a one quarter thing. This is going to be a multi-year thing. Well, what do we even have to factor in? So you're going to sell out of NVIDIA when they just reported the most shocking guidance of any public company I've ever seen in 15 years? Come on, man. And so NVIDIA, I wouldn't be surprised if that's 400 plus before you know it. Meta's on its way to 300 plus. Palantir's on its way to, I would say, 1750 and then beyond. And so a lot of those stocks, I don't see the moves slowing down anytime soon. Meanwhile, for these other stocks, I don't know if there's anything that saves them in the short term, to be quite honest, right? No. PayPal, okay? PayPal's $60 a share roughly here today, okay? And this is the easiest money I've seen in the market from a risk-reward standpoint since Meta in the fourth quarter of 2022, okay? And obviously, you know, I'm starting to position into shares in quite a substantial way, and I don't see that slowing down. And if PayPal goes down anymore, I'm going to do some major buys in regards to this one, okay? Now, obviously, you can just buy shares straight up, but you can also buy options. If that's something somebody wants to play, you could look at something like long-term options, you know, something that expires January 2025. I believe they do have December 2025s out there for PayPal as well, right? So if you wanted to play a little higher risk, but let's say risk less capital, like let's say you're in a position where you're like, I could put, you know, I think, let's say you thought PayPal's a great deal, and you say, I could buy $30,000 of stock, or, you know, straight up, or I could risk, let's just say $5,000 in options, right? Because I don't want to risk actually $30,000 in that. I'd rather put in the $25,000 over here, and I'll risk $5,000 in PayPal options, right? You could do something like that. And so if you're a little lower risk, you could do something like $50 strikes here on PayPal. You would have to pay a little less than $20, right? And so basically $70 would be your break even. So the stock's around 60-ish right now, right? So $70 is your break even. You need it at least at $70 roughly by January 2025 to break even on it. Now, for every $20, it's above that, right? You're going to make your initial investment back, right? And then again, for every $20 past that. So it is something to keep in mind there, right? If you're a little more of a mild risk options person, then you could buy racing. You know, this is roughly right what the stock's trading at right now, right around 60. And you have to pay around $14 for that, right? That would put, in terms of your overall, you know, what you need the stock at, you need it at about $74 in regards to kind of your break even there, roughly, right? So, you know, obviously you're taking a little more risk, but at the same time, if you get a major move up, you're going to benefit more. Let's say the stock goes to $150 or $200, you're going to benefit more than you would if you owned these ones, okay? Then you get the medium risk guy. So this is $70 strikes. You'd pay about $10 for these. Maybe you get a little less than $10, right? So it puts your break even at about $80 there, roughly, right? But every $10 above $80 it is, you make your initial investment back, right? And again. And I mean, imagine the stock's, you know, $150, $200. By the time January 2025 rolls around, oh my gosh, you're looking pretty in that situation, right? Then there's a high option. This is if you want to take high risk, right? Then you go buy something like $100 strikes, right? You would pay about $3 for those. And I mean, obviously, you're taking a much bigger risk, right? Because now your break even's $103 roughly, right? But on the flip side, you say, well, if this stock rolls and, let's say you're expecting the stock to double up or triple up over the next, year and a half or so, I mean, obviously the gains would be substantial, substantial, right? You could be looking at a 10x your money, 15x, 20x, 30x, something like that, in regards to that. And then there's the last guy. Like, this is the guy your mom warned you about, options guy. He's the craziest one of the bunch, right? He goes for the glory and all the failure as well. And you're going to have to take a lot of failure. You're doing stuff like this. This is basically taking it out to double the price right now, right? So $120 strikes. You'd only have to pay about $1.50 for those. And obviously, if PayPal booms, I mean, my gosh, the percentage gains you're going to have if the stock's $150, $200 in January 2025 is insane, right? But at the same time, I mean, you need the stock to double up pretty much just to break even. So it's a massive, massive risk reward play there. Okay. So that's just, one of many options obviously people have out there to, if you want to play a stock, and depending upon how much money you want to funnel in. I personally prefer usually to just buy stock straight up, because I mean, for me, it's less stress. Yeah, I have to allocate a bigger portion of money than you might through options, right? But I don't put myself under a time frame. The scary thing about putting yourself under a time frame is what happens if the market's really bad for the next 18 months, PayPal doesn't do good. Like, that's the risk with that, right? And your options expire worthless, and you're like, oh, this is so frustrating, right? So the name of the game when it comes to options, I think, is just don't risk the farm, especially on options, right? You got to always be positioned mainly in long positions. And if you want to do something like that, you got to position small, because yeah, it's great when things go right, but man, you never know. What if the Nasdaq goes down 30% over the next 18 months? It's always a possibility, right? And what does that mean for PayPal? So these are things to kind of keep in mind. Now, Ulta, one of the greatest companies literally in the stock market, is down 7% plus after hours. I got to look in depth at their numbers. From what I saw, an initial look, didn't look that bad. But I don't know. I'm going to have to retake a look here and see what's going on with Ulta. Remember, this is a stock in 2009 that was $5 a share. 5 flipping flapjack and dollars a share. So I'm going to take a peek there and see what's going on in regards to good old Ulta here, folks. Okay. Hope you enjoyed today's video. As always, tomorrow I'm making moves in the Patreon portfolio. So if you want to see the moves I'm making in my Patreon portfolio tomorrow, plus be part of our Discord chat and get to see the future moves I'm making in there, check out the pinned comment down there. That will be to join us in there. Also, I put together if you make 6 figures or less a year, I put together a free workshop for you for investing in 2023 and beyond. I'm going to leave that in the description area if you want access to that. It's a free workshop. I can send it over to your email if you're interested in that. So make sure you get in the Patreon and get to see the moves I'm making, plus be part of that Discord over there. I appreciate everybody joining me as always. If you're looking to join my private group, that's in the description area for an application. Much love and have a great day.